I want to start off by asking, you've put your own money on this turnaround really being successful.
Yeah, absolutely. I mean, there's been many people in South Africa who have had doubts, who are a bit cynical about the prospect of change in SAA, given that SA has had many strategies in the past. And when we come in with a new board saying we will implement the strategy, there's a great degree of cynicism. And I've been called up to put my own money, skin in the game. And we believe that we are going to turn it around because we are executing the strategy. Since I came in November, we've made hard decisions and we'll continue to make tough decisions to make sure the airline does indeed turn around.
How much do you stand to lose if this doesn't work?
Yeah, well, I've been called up to say I must put up 100,000 rands of my own personal money, not the taxpayers' money, if I don't break even in 3 years' time. And I think it's easy to do this. It's less about money. It's about the commitment to the country and what we need to do to make the airline turn around. It plays a very important role in Southern Africa and in South Africa, so we have to make it work.
How has the mood changed in South Africa since the elections, particularly when it comes to business investment and your industry?
So I think if you look at the role SAA plays in the market, we move people intra-Africa. We play a significant role connecting Africa to the rest of the world, alongside other major players, of course. So there's a renewed sense of optimism inside SAA. I think the people of SAA are committed to make it work. We also understand that it's going to be a long road for us. There's going to be tough decisions we have to make, but we're all committed to actually implement the strategy this time around.
What does the turnaround look like? Because you've said the airline needs $400 million or thereabouts to be able to meet debt repayments. Are you likely to get that? And what does that look like?
So I think that part of the money has been committed already by government, but there's a much more bigger framework of change for SAA. Many people will know that SA has made losses for many years, and really for many years. We've got debt of 9.2 billion rands. We also need about 12.5 billion rands for working capital up to the break-even point. That capital requirement is underpinned by a very clear strategy, a will to execute on the plan. That talks to route rationalization, taking out some of the cost on the supply chain side, and also rebalancing the workforce. And that's what we are doing with the team that I've put in place. I've assembled a very strong leadership team that's committed to make sure that we execute on the strategy for SA.
Vuyani, you mentioned some of the changes in the cost structure. What needs to really be addressed? Many people have complained that the airline is fairly bloated here. What specific changes will you make to achieve profitability at some stage, and some stage soon?
I think one of the key things is really the commercial delivery and looking at route rationalization. You have to look at routes that are loss-making and the ones that you can never recover, where your strategy will not work, and then begin to cut those. And that's what we have done already. We have rebalanced the domestic market capacity between ourselves, which is a full-service carrier, and our own low-cost carrier. Having done that, we're seeing margins recovering on this full-service carrier, and also the load factors have improved significantly on Mango. Inside the business, how we procure services, the cost of buying things, simplifying the organization will actually give us big savings from purely operational efficiency. And of course, you have to look at all the other ratios. So there will be no holy cows, there are no sacred cows at SA. We have to make the turnaround work. Route rationalization, commercial delivery, taking out costs on supply chain, and rebalancing the portfolio of people, costs to revenue. That's what we'll be doing in the next couple of months.
So, Vuyani, how many job cuts are you looking at?
Well, we're busy doing the analysis now, working with the people of SAA. Every month I meet with unions. I have bilaterals with every union. I also meet with the unions in the form of a forum. We're busy synthesizing this because all what it has to be based on an operating model. So we have really designed a new operating model. Then we're going to go through the organizational design process. What we're careful about is just to mete out willy-nilly headcount cuts without understanding the framework on which we actually base this. Otherwise, you retrench people, you cut headcount today, and the next 3 years you have to go back again. So we have to be very systemic about this so that we do it once and make sure that we make the airline fit for growth one more time.
Okay, fit for growth. What about the fleet? You have A340s, you've got quite a few of those. Now, this is a very inefficient aircraft, but the thing is you're caught and you're stuck with them, aren't you? You would want to get new planes. more fuel-efficient planes like 787s or A350s. How do you do that? I mean, do you end up having to lease ultimately? And what do you do with those A340s, which are really at the moment just burning money?
Yeah, obviously, we know that we have challenge of the 4-engine aircraft. Firstly, what we did, we took them out of the domestic market where they were hugely inefficient, contributing to losses in the market. What we have to do, we know that with the oil price movement moving outside the $70 a barrel range, it really it will pose problems, especially if it stays in that range for a longer period of time. We have to find intermediate solutions of re-looking at the older fleet without taking long-term decisions under pressure. So we've got teams dedicated to relook the network. Once we've done the network optimization, then it will spit out a framework for the fleet framework. And once we know what the fleet would look like, then we have to look at the commercial arrangements that will enable us to renew the older fleet without breaking the business model. It's important that the 5-year plan is not broken because we are finding new ways of renewing the fleet. So this is the big piece of work that's being done. It's being modeled by the team today. And I know that in the next 3 to 4 months, we'll be talking to the board about the scenarios.
Vuyani, with the network reductions, how do you compensate with that with your alliance strategy? What's the right fit in terms of the alliances?
It's a very important point that you are raising because alliances and partnerships are going to be very key to our strategy. We're going to be looking at commercial JVs in routes that we need to develop where we do not have enough metal to fly. Working with airlines that have the same aspirations, that are like-minded, where we can balance the economics on a win-win basis. We think that the African continent is the only way to win in the continent to improve passenger experience is going to be partnership between larger and smaller airlines, but you have to make sure that the standards are defined in terms of safety, in terms of customer experience. We see alliances and partnership being very, very key to our strategy for growth.
You are the 8th CEO at SAA in 8 years. I mean, how damaging has that turnover been, as has been political meddling? Are you hoping that both of these things become non-issues going forward?
Yeah, I think the single biggest disadvantage of the lack of stability in leadership at SAA and the lack of implementation of the strategy is that all these things have brought in a degree of cynicism as to whether SAA can really change. So we're working against a backdrop of a great deal of disbelief. I think what we have done in the past 6 months is bringing evidence that we've got a board and leadership that's very committed to actually make SAA work. And it's for South Africans and the world to start backing our story, because I think if we look at the strategy, it's quite instructive. We are showing a great deal of commitment to implement the strategy. I think that's the disadvantage of lack of stability for many years. People become a bit cynical about, is it really going to change? I can tell you now that we are committed to make it work, and it will change.
When are you hoping to make a return to fuel hedging?
Well, kind of, we have a hedging policy today, but obviously, you would know that to be able to implement fully, you need the financial wherewithal to be able to do that. So we're looking at other instruments of protection against the movement in oil price. For example, we have a sense that at the top end of $70 in a normal economic framework outside the geopolitics, it should rebalance, but we think it should rebound because the U.S. will still have the production in the U.S. in terms of fracking will start being a lot more practical and real. So we are in a position now where we have a hedging strategy, but we haven't fully implemented it because of our own current position. But also the rand dollar exchange rate does provide a degree of protection depending on the movement. So far, the movements have been kind of counterbalancing the oil price movement so far.
Well, I mean, the rally in the rand has really hurt you as well, right? What assumptions are you making with regard to the fuel price and with regard to the strength in the currency in your budget?
So, you'll see that if you look at the revenue base of SAA, 50% of it is largely hard currency, predominantly dollar denominated in the cost base. So in the economics of the airline, you do have a certain level of balance, but there is a certain level where if the rand strengthens significantly, so beyond a certain point, you start to see the impact on the P&L. But there's a range of movement of the rand within a 1 rand to the dollar range where this counterbalances, then you still can keep the same level of profitability. So there's a degree of natural hedge that sits there, but obviously we have to look at other methods of dealing with the hedging policy and be able to fund it in the long run. The big thing, though, is really getting efficient aircraft into the system so that we're able to manage the cost without relying solely on financial instruments.
Oil aside, what is really the biggest challenge to your turnaround plan?
The challenges of SAA are probably less about the market. They are more about how we are organized to address the market. So we have to look at the internal organization turnaround, building commercial logic, making sure we bring commercial skills. The single biggest obstacle, of course, is going to be the organizational culture. So we have to understand that we are not a state department. We're a commercial enterprise that happens to be owned by government. It competes in the market. Our pricing framework is not a cost plus. It's the price in the market less our cost. So getting people who understand that managing the cost significantly to give yourself headroom to compete in a competitive market becomes very critical. So it's about organizational culture. That's the single biggest obstacle we need to overcome as SAA.